What income threshold stops me from claiming a relative as a dependent? Imagine helping out a family member and wondering if you can get some tax benefits for doing so. Well, knowing the income rules can make a big difference in your planning. When it comes to claiming a relative as a dependent on your tax return, the main number to remember is their gross income. For the tax year 2025, a relative must have less than $5,050 in gross income to qualify as your dependent. Gross income includes all money, goods, property, or services they earn that are not exempt from tax. This means if your relative earns more than that, you generally cannot claim them as a dependent. There are other rules to consider too. First, the relationship test says the person must be related to you in certain ways, like a parent, sibling, child, or other close relative. Second, the support test requires you to provide more than half of their total financial support during the year. If they earn over $5,050, they likely do not meet this support requirement. Third, the relative must be a U.S. citizen, U.S. resident alien, U.S. national, or live in Canada or Mexico. Lastly, they cannot be claimed as a qualifying child by someone else. Understanding this income limit can help you plan better. If your relative earns just under $5,050 and you support more than half of their expenses, you can claim them. Doing so might qualify you for extra tax credits or deductions, which can lower your overall tax bill. Keep in mind, this $5,050 threshold applies mainly to relatives who are not qualifying children. For children, different rules apply, like age limits and residency requirements, but their income usually does not matter for claiming them as dependents. When filling out your W-4 form for tax withholding, claiming dependents correctly can help you pay the right amount of tax. If you claim a dependent who qualifies, your employer will withhold less tax from your paycheck. This means more money in your pocket each month, making it easier to budget and plan your finances. So to sum up, if your relative's gross income is less than $5,050 in 2025, and you provide more than half of their support, you can claim them as a dependent. They must also meet relationship, citizenship, and residency rules. Claiming dependents properly can help you reduce your tax burden and improve your financial situation. Knowing these income limits is a simple but powerful step toward making the most of your income and tax benefits.